Let's take you to some of the latest in the world of business. After closing marginally firmer on Thursday, with global peers also firmer as investors digested more U.S. economic data, the local index is expected to fight to maintain these gains today. Grant Nader, Benguela Global Fund Manager, Senior Portfolio Manager, joins us now for an analysis of the latest market moves. Grant, a very good morning to you. Thank you so much for your time. What's the latest on the JSE and Rand front at the start of trade this morning?
Good morning. We've started mildly in the green, up about 0.5%, and I think that's actually very encouraging. We did see quite a lot of volume come into the market yesterday toward the end of the day, which suggests there were some buyers around, and we're seeing a little bit of that follow through this morning. Again, a strong number in the US, or at least green markets again. And of course, we started this week with significant volatility post their inflation numbers, and we've had quite a round trip, but currently we're sort of slightly in the green for the week. And I think that's quite encouraging. There's been quite a bit of volatility. The PGMs have been on a wild ride, and some of the SA stocks as well. But it seems to be bedding down. The rand has strengthened back below 19. Dollars giving up some of its gains, and that is helping commodity prices and some of the sentiment around our currency. The one thing we have to keep an eye on is the oil price, which is trading quite strongly. It's trading back about $82. The Brent, that is, had quite a good move yesterday. So that's something we need to just keep a little eye on. But other than that, there's a broad calmness in the markets post the sort of scare we had earlier on in the week that looked like we could be in for a rough ride. So I'm encouraged by the opening trade so far. We hopefully eke out another green day.
Yeah. On the other end, KAP has warned shareholders to expect earnings to drop when it publishes half-year results at the end of February. What's driving those declines?
So KAP, obviously being a diversified industrial, they're exposed to logistics, chemicals, all of the things that are highly plugged into an economy, and we all know how tough South Africa's macroeconomy is, from logistics to consumption to industry, everything. So they're facing a tough macroeconomic environment. And then you add to that, part of the second update is that they had some recoupment of earnings in prior periods, and that has increased the earnings from 2022 and 2023. Making this period look a bit lower in comparison. So that also makes the drop. They're expecting earnings to be down 25 to 36%. So there's a bit of exaggerated dip there from that adjustment. But of course, the difficult environment is key. They have a lot of debt. They are struggling a little bit, and they're even looking at selling one of their key assets, which is Unitrans, which is a multinational logistics company, for up to 6 billion to bring down those debt costs. And of course, we all know how high interest rates are at the moment and how that is hurting companies that have too much debt. So we'll have to keep an eye on that. Hopefully they can steady that ship and turn it around.
Yeah. Nampak says a combination of waning demand for plastic and paper and high labor costs have resulted in lower than expected turnover for the first quarter of its 2024 financial year. Talk us through those moves.
So Nampak is, yes, they've had a tough time, but once again, they're highly attuned to the macro environment, to the overall economy. So if the economy is not growing, people are not consuming more this year than last year. So they're facing challenges there with consumption. Plastics especially, we're moving away from them. The can businesses are doing pretty well, and really they're expecting a flattish revenue outcome. But I think what stood out to me as well when I looked at the result or the update, was that they are doing a good job with what they can control. They're managing costs well. They are keeping, we all know costs are difficult. We've got logistic issues, etc., and inflation. So they're managing that part of the business well. They have some issues with labor costs. They say are still a bit high, but they're bringing that under control. They're implementing this divestiture program that they're using to pay down the debt, which was originally part of the problem they've been facing. So they're bringing the debt levels under control. Another good thing, another positive. Where they are struggling as well is in Africa, where the currency mayhem in the likes of Nigeria and some of the other regions, and Zimbabwe, even though the operations are not doing too badly, the currency is causing havoc with earnings. So there's a lot of noise and a lot of challenges, and what I think I see is a management team that has at least taken hold of the actual underlying business where they can and controlling what they can. So some signs of encouragement that the turnaround program that they're implementing is on track.
Yeah. BHP also posted a half-year 2024 exceptional items update. What did they have to say?
So they're expecting exceptional items of up to $6.6 billion. It's a significant number. They had previously guided to around, I think somewhere around 3 billion. So they've upped it. A big chunk of that has come from Samarco, which is still the mining disaster in South America from around 2015. This has been dragging for a long time. There's been some further developments around the legalities, and so they've had to raise an increased provision of over 3 billion there to a total of around 6.5 billion. So it's a significant number. The timing and the of payout, so the cash flow impact is not yet clear, but that's a big number. That's the biggest component. And then their nickel mining operations, they've had to mark down some of that because some of those operations are actually loss-making. They were sitting on the book at over $1.2 billion, but if it's losing money, it's being impaired down to a negative value. In fact, it's going to cost them money to close that mine. So there's quite a big impairment schedule going on there. I think it's typical with where we are in the cycle. It is going to impact their cash flow and perhaps their ability to invest through the cycle, maybe even the dividend payouts. So it's not ideal, but I think we're all aware of some of these challenges for the miners at the moment.
Yeah, absolutely. Thank you so much for your time in that analysis. Let's leave it there. Grant Nader of Benguela Global Fund Manager, Senior Portfolio Manager there, giving us a sense of what the world of business is looking like and how the markets are faring.